CIO of Passive Equity at Charles Schwab Investment Management. Omar, really, investors have had to digest a whole weekend of very confusing news. What is your latest thinking on the markets?
Well, it's all about unprecedented uncertainty. Volatility is what is going to continue to drive markets, and as you clearly said, information is coming from different places. Starting with the crisis of the coronavirus we have, and obviously the health of the president is on everybody's mind, and just what this means is that people are taking a little bit more of a precautionary situation, whether it's in going out for dinner or doing anything like they used to be. Obviously, the psychological effect of people and investors will be on what is the consequences of this and the reopening of the economy. As we were getting into a little bit of a momentum as things were reopening, these obviously together with the fact that in Europe and in other states, the continuous growth in cases for the virus is probably going to take a little bit of a pause related to what will go down the road. On the other hand, we also have the fact that we have a lot of political uncertainty. So we're like less than a month from election in the U.S. We have Brexit. We continue to have talks with China. So that will continue to raise the level of volatility. And then finally, we obviously trying to see how the data on unemployment is affecting the economic conditions for the recovery, knowing that we're going to be in a slowdown of the economy as we were going into the fall of this year.
Omar, even in this environment, even if you are a longer-term investor, you're holding for 3 to 5 years, right now, is it a perfect storm of events between COVID, the election? Is it time to start raising more cash?
Well, this is, when you have periods of volatility, there's always opportunities to do many things. One is to continue to look at the long-term objectives that you have. And this gives you an opportunity to rebalance. This volatility always gives you an opportunity to reassess your risk and put your positions where you need to be. Second, it also gives you an opportunity to do tax loss harvesting. In many cases, when the market drops and you're allowed to rebalance and stay invested in the market, you can actually, create and have opportunities to take advantage of markets downturns. And then finally, it is looking at, are there any opportunities that risk because the market is in disarray? Usually when you have these levels of volatility, there are opportunities when things get mispriced and therefore, opportunities to put some positions into place.
Omar Ines here. The market action that we're seeing today, these markets, are these up because President Trump may be released from Walter Reed? Are these up because of hopes of a stimulus? Does President Trump's diagnosis put the focus back on the virus and the need for stimulus? And could we get that possibly before these elections?
Well, it's a combination of three things. One is clearly the market seems to be focused on the potential for a fiscal stimulus that is definitely needed for sustaining the spending power of consumers. And what is clear is after last week's labor report, when we see the participation rate continues to slow down and income continues to go down, the need for fiscal stimulus is right there. So with everything that has transpired, especially as we're getting closer to the election, the push and the effort towards the stimulus will happen. So the market seems to be a little more optimistic of the potential of a deal on the stimulus side, in the near future. The second is really probably less about the uncertainty surrounding the health of the president, because it sounds like all the reports show that there is progress and that things will be just a matter of time, and therefore potentially the fact that there is a treatment and there is a treatment that could be potentially used to treat the disease down the road, which is one of the potential paths for recovery once you get a sense of either a vaccine or a treatment or a combination of both.
And what happens if it becomes clear that the stimulus comes after the election, no matter what? Are we going to be seeing then just more volatility leading up to these elections?
Well, I think volatility will happen with or without the stimulus. The stimulus will potentially bring the market higher, like it is this morning. But as we get closer to the election, a lot of that will be depending on how the potential and the probability of a contested election and how long that contested election will last will bring more volatility even with the stimulus. Obviously, the stimulus will provide a significant support on the economic side, But definitely the market volatility will be here, probably for the next, 2 months.
Omar, is now, just based on what you've been seeing with regards to the COVID-19 infection and death numbers, just really a continuing morbid trend across the country and around the world, is now the time to start putting more cash to work back in some of these work from home trades? The food companies, we just had Conagra Brand CEO on, Sean Connolly. He continues to see strong demand. The work from home tech trends, because it's clear return to work may not happen anytime soon.
Well, the businesses that continue to be well positioned for this environment are those that have the flexibility to be less in the service sectors and more in the, I would say, technology, telecommunication levels, because even after we get a vaccine and even after we get into a sort of stable place with the virus, I think the trend for working from home will stay with us for a long time. And the flexibility that corporations and many businesses will have for their employees is something that obviously will be, at least partially, a component that will be down the road. Therefore, a lot of these companies that are generating good cash flows, that have good businesses, that continue to expand in CapEx, and I would probably say that's the key piece. Those companies that continue to expand their capital expenditures to continue to build upon their technologies are those that are well positioned for the future. Even with that vaccine, I wouldn't necessarily think that means that everybody will return back to work, to offices right away. And therefore, companies that are well positioned to take advantage of speeds and communication, and as well as technology that help them in position and help corporations and businesses to do better, will continue to drive the market. Note that in many cases, I receive a lot of questions about when is a good time to rotate towards value, towards cyclicals. And in many cases, what the theory suggests that doesn't happen until the final recession sources are resolved. And in this case, the source of this recession was the virus, and we haven't resolved that. It's not going to be until we have a more clear path on how we resolve the virus that we're going to start seeing more of a rotation away from those high-tech names and into more traditional cyclical value names.
Okay, let's leave it there. Omar Aguilar, CIO of Passive Equity at Charles Schwab Investment Management. Always good to see you.
Take care. Thank you.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.